in Asia already. Yesterday, that was the third straight day, even as we were temporarily halted for 26 minutes in afternoon trade. Recall that finally we are back to the longer or at least normalized trading hours until 3 p.m. And you can see that up by 0.5%, 7,100 levels here. Analysts are saying this rebound is due to the fact that there are declining COVID cases over the weekend, and of course, a lot of activity in the bourse. Apart from the Medilines IPO that we had shown, another IPO is in the works. Figaro is saying that their IPO is likely to be this month already. They've received the go signal from the PSE for a 1.77 billion IPO, subject to approval conditions, of course. What is under Figaro? They have Coffee of Figaro, Angel's Pizza, Tienmas Taiwanese, TFG Express, and Cafe Portofino. They're looking at listing on December 31, and the offering is from December 16 to 22. So final photo finish for 2021 there. Now, I want to take a quick peek at just one specific stock today, and that is Globe Telecom, which is up by 10 points. That's 10 pesos. That's up by 0.3%. This, as they've mentioned in an interview yesterday, the CEO of MYNT, which of course runs GCash, Marta Sazon, had an interview with Bloomberg TV's Rashad Salamat and Yvonne Mann, which said she did mention that Globe FinTech is considering a platform that will allow users to invest in cryptocurrencies and even trade local and global equities. So of course, you might be able to use your GCash account for crypto trading and even equity trading. She also mentioned the company is on track to hit 3.5 trillion pesos worth of transactions. That's quite a lot. By the end of 2021, GCash now has 51 million registered users. Every day, there's a peak average of transactions at 15 million pesos and daily logins worth 23 million pesos. Let's check in on the other headlines we're keeping our eyes on. Globalsource Partners expects the Philippine economy to grow faster than expected this year. The research consultant expects economic output to expand by 5.5% this year, and in 2022 faster than the 3.5% estimate it gave in August. It is also better than the government's 4 to 5% goal. But it warned that the 2022 elections and the growing inequality could be risks to recovery. Globalsource analyst Romero Bernardo and Maria Christine Tang said that it would take until late 2022 for economic growth to go back to its pre-pandemic levels. This latest forecast presumes that current vaccines will protect Filipinos from the OMICRON variant, while the national and local elections would also be credible. Now, while other countries have been reporting more and more cases of Omicron, the Philippines so far has been spared from the new variant. But the health department is already monitoring over 250 travelers from South Africa that entered the country from November 15 to 29. Among these travelers, 165 are still ongoing verification, while 8 have yet to be located. Meanwhile, the Octa research team says the Philippines is now experiencing its lowest case numbers in 20 months. Nick Austriaco, a molecular biologist based in the US, said the Philippines is now averaging 500 cases per day. That is a far cry from the 120,000 new cases recorded in the US on Monday. As a result of these better numbers, the Philippines jumped 46 spots in the recent Nikkei COVID Recovery Index. From 103rd place, we are now at 57th. With November inflation higher than expected and October's unemployment coming in now at 7.4%. How does this all feed in to our latest outlook? Here to weigh in, we have with us Mike Ricafort, Chief Economist of RCBC. Good morning, Sir Mike, and welcome to Businessworld Live.
Hi, good morning, Danie, and to your viewers.
Sir, ang daming nangyayari. Quick reaction muna on the inflation figures here. Lower than the previous sprint, but higher than the survey analysts, at least on Bloomberg and Businessworld. and still above the target levels of the Banco Central. Plus, you've got unemployment, easing from the last sprint, but still, anything above 5-7% is, of course, worrying. Tell us what's your take on this?
Well, true, Danny. At least it eased year on year at 4.2%. It's the slowest in 4 months or since July. But nevertheless, expectations range a little less than about 3.8 to 4%. But this is expected because there's a lag effect on prices, meaning we have seen oil prices elevated for quite some time, and that resulted to increases in local fuel pump prices as well as higher energy prices. And of course, there's the some pass-through effects of higher energy costs. But now, maybe the expectations were kind of ahead in the sense that it would take some time. I'm talking about the recent decline in global oil prices. They declined to new lows in 2 to 3 months lately, especially for the past 1 to 2 weeks in view of the Omicron variant concerns that could slow down global economic growth and demand. In fact, global oil prices at some point declined by $20 from their peak more than a month ago. Um, and it's still hovering near, well, among 2 month lows lately. So that's, and we have seen that already, some rollback in local fuel pump prices, and we would still see the positive effects on this in terms of lower inflation, especially for the month of December, as well as also other global commodities also ease, like coal, natural gas. We have seen some easing already after elevated levels, uh, at least for the past, in the previous 1 to 2 months. So there's a good chance that much of these positive leads in terms of easing year-on-year inflation would be reflected for the month of December, because of the lag effects, understandably, uh, Danny.
Sir,
So yeah, go ahead.
in the US, they've mentioned po that we're also waiting for the inflation print in the US, no? And the Fed has already said that it's not no longer transitory, that they will be raising rates. What about here? The BSP has still said you're going to stay accommodative. How long can we stay that course, apart, from the fact that we're above target? And also given the fact that the US might be or is more hawkish right now.
True, Danny. It would be that it would largely be a function of the pace of the how the Fed would withdraw some of the monetary stimulus measures, in the sense that they would try to speed up the tapering. So the estimated time that that could be completed would be the middle of 2022, before any adjustments on Fed funds rate could take place. So that could be brought forward a bit because of the as well, that consistent with the recent signals from Fed officials, in view of the need to fight and better curb inflation to prevent it from uh, well, rising further. But at least now, because of the recent developments, we already saw the sharp decline in global oil prices, the sharp correction. So hopefully that would help ease it a bit. And well, at the same time, yeah, true. They have already, with the Fed, at least from the point of view of the Fed, they already retired the word transitory to describe elevated inflation, and that would also signal greater urgency for them to better control inflation to prevent it from becoming well, becoming more elevated going forward, no, and to nip it at the bud, uh, in those terms. So
Okay.
locally, the local policy rate would definitely be a function of how the Fed would act. In as much as other central banks also take their cue on how, well, for instance, the Fed funds rate right now is at a record low of 0 to 0.25. So if and when the Fed starts to hike rates, at least for the past couple of months, the signaling from the Fed, the dot plot, would suggest that at least 25 basis point increase on the Fed funds rate could happen in the latter part of 2022. that would be the time that would trigger also similar or lockstep increases by other central banks, and that may include also here in the Philippines because of the interest differential plays, and also of course also to the need also to uh, as part of maybe also to some extent the need to better manage inflation to put it back
Mm-hmm.
towards the target range.
Sure. We just have the unemployment figures coming out for the month of October. I'm just gonna pull out that chart for you so you can see here, no? 7.4% for the month of October. The prior print was, of course, 8.9%. And also, this comes with 3.5 million people still unemployed. Is this, a positive sign? What happened in the month of October, compared to the previous months? Do you see this already as an improvement? It's the trend, when we see the past few months, it's just going sideways. Can you see that there's already a market improvement in the in the employment rate, and what can we expect towards the end of the year?
Yeah, Danny, there's also some lag effects also on the inflation data in the sense that well, we have seen already further reopening of the economy, especially well, if you recall what happened in October, we have seen the alert level of NCR being eased further to alert level 3 from alert level 4 because the alert level system started in Metro Manila on September 16. So definitely to put things into better perspective, we came from lockdowns uh, in in the early part of August. That partly explains the temporary spike in the unemployment rate to 8.9% in the previous month. So the easing of that
Mm.
to 7% levels is widely expected, and that could still ease some more because come November 5, the alert level system of Metro Manila was eased further to 2 from 3, and that practically reopened the economy in a significant manner in the sense that uh, a lot of businesses and industries that were closed for most of the pandemic, they have already started to reopen starting November 5. And if you recall, even senior citizens and minors were finally allowed to go out of their homes back then, and that's going to be a boost to many businesses and industries. So, and not to mention also that for the month of November, the alert level system was already adopted nationwide, meaning it's a de facto reopening of the economy. It's shifting towards granular or smaller scale lockdowns and away from the larger scale lockdowns at the city, provincial, and regional levels that we have been used to seeing since the pandemic last year. So that's already a thing of the past. And definitely, and we're moving towards the Christmas season, given the sharp reduction in new cases, it's the lowest in 17 months since July of last year, as well as the increase in vaccination. We're moving towards population protection. So definitely that's really gonna boost economic activity, especially in the Christmas season, and that would create more job opportunities, either seasonally or also permanently, in view of the bright spots in the economy, Danny.
Sir, on the back of that, just quick, your quick opinion on how big of a risk is Omicron. Right now, we don't feel it yet. We're still below 500, but we are, of course, monitoring travelers from South Africa. People are saying that's imminent. Have you been able to digest that information and put in the worst case scenario for our growth prospects, especially with some global growth downgrades happening?
Uh, True, Danny, because the tangible effects of that for now would be the travel restrictions, the flight restrictions. Definitely, that's gonna be a drag to the economic recovery or demand. That's one of the reasons why we saw global oil prices suddenly declining from a peak of about, well, the benchmark from about $85 for the Brent oil. It went down by more than $15 at some point. Even some of the oil benchmarks even declined by $20 from that peak more than a month ago. It's because of that. No? However, everybody else is on a wait and see
Mm.
attitude, being prudent at that, no? Nipping the problem at the bud, meaning uh, these restrictions, these curbs on international travel, is that's really meant to uh, prevent it from spreading further. And well, at least based on the initial indications and data that well, it could be more transmissible, but however, it's less deadly than the Delta variant. But we know for a fact that the Delta variant has already been defeated in this part of the world, at least locally. It's already defeated because of the increased vaccination. But of course, in the other parts of the world, there's still some surge. That's why it's really better to be prudent, as everybody else is still waiting for further details on for instance, how well further details on really how transmissible is this Omicron variant, and how effective the existing vaccines and other medications like the COVID pills would be
Mhm.
in fighting this variant. And of course, if there would be a need for these vaccine makers and the COVID pill makers to make tweaks to better adapt to this variant. But nonetheless, the one of the best solutions to face this challenge is really to further increase vaccination. Enable that would fundamentally prevent it from uh, from mutating further, and at the very least, that would also prevent severe cases going forward. So, well, at least well, that would be the effects, but eventually, if the vaccines and the COVID pills well eventually adapt better, so yeah, that would really give greater protection to the population, as everybody else, many countries around the world are moving towards herd immunity, and eventually it would still be in the steps in the right direction in further reopening the economy towards greater normalcy. Maybe the alert level one being well, as a matter of prudence, alert level two has been maintained. So there's still chance for alert level one going forward if this turns out to be more manageable. As we will find out, at least for the next 1 to 2 weeks, based on initial indications.
Thank you, sir. So, of course, wait and see pa rin right now. Too early to jump the gun, but as you mentioned, continuing pa rin on that vaccination strategy and reopening of the economy is the way to go. Thank you so much, Mike Ricafort, Chief Economist of RCBC.
Thank you so much, Danny, and to your viewers.
And that's a first look into the business day. Today's Tuesday, December 7, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.